My brother walked out of that conference room smiling. I knew exactly what was coming next. He thought he'd won. So did his lawyer. I let them think that. My name is not important. What matters is this: I spent 4 years holding together a business that was never supposed to be mine. And then, the moment it started working, really working, my brother decided he wanted it back. But I'm getting ahead of myself. Our father built Caldwell & Sons Hardware from nothing. A single storefront in Dayton, Ohio. He opened it in 1987 with $12,000, a used truck, and the kind of stubbornness that either destroys a person or defines them. For my dad, it defined him. By the time I was in high school, he had 3 locations. Nothing flashy, just steady, honest work. I grew up in that store. I stocked shelves before I could drive. I learned to read a balance sheet before I learned to parallel park. My dad didn't differentiate between me and my brother Owen. We both worked. We both learned. We both earned. We both understood that the business was the family, and the family was the business. Then my dad got sick. He was diagnosed with early onset Parkinson's when I was 26. Owen was 30. Dad was 61. The first year wasn't too bad. He slowed down, delegated more, leaned on Owen and me to handle day-to-day operations. Owen was technically the one in charge. He was older, he was a man, and my dad came from a generation where that still meant something. I didn't fight it. I just kept doing the work. But Owen had other ideas about what being in charge meant. He hired his college friends. He greenlit a renovation on the flagship store that ate through our cash reserves. He started talking about rebranding and expanding our digital footprint, and other phrases that sounded important but produced nothing. Meanwhile, I was the one calling vendors when invoices went unpaid. I was the one renegotiating our supplier contracts when Owen's renovation threw us off schedule. I was the one sitting with my dad on Sunday afternoons, going through the books, quietly trying to hold things together without letting him see how bad it had gotten. By the time my dad's condition progressed enough that he needed to step back completely, the business had lost one of its 3 locations. Owen had signed a lease he couldn't support, and when the numbers didn't work, he simply walked away from it. Left me to handle the default. My dad sat me down in the spring of my 28th year. It was a Tuesday. He had his coffee. He was having a good day, which meant his hands were relatively steady and his voice was clear. He said, "I need to make some decisions while I still can." I told him I understood. He said he wanted to transfer operational control of the business to me. Not ownership, just control. A management agreement that would give me authority to run things while he remained the legal owner. Owen would still receive his share of any distributions. Nothing was being taken from him. I was just being given the tools to actually do the job I was already doing. Owen wasn't happy. He sat in that same kitchen 3 days later and told my dad it was insulting, that he was being pushed out by his little sister, that I had always been the favorite. My dad looked at him for a long moment and said, "I'm not choosing a favorite. I'm choosing someone who shows up." Owen left without finishing his coffee. I signed the management agreement. I took over the books, the vendor relationships, the employee scheduling, the tax filings. I also took over the debt Owen had accumulated. Not legally mine, but practically mine, because if the business failed, it was my father who would suffer. I spent the next 4 years rebuilding. I paid down the debt methodically. I renegotiated every supplier contract we had. I opened a modest e-commerce channel, nothing fancy, just a functioning website where contractors could order in bulk and pick up same day. Revenue climbed. We stabilized. Then we grew. My dad saw some of it. By his last good year, we'd reopened a second location. Not the one Owen had lost, but a new one, in a better part of town. Dad came to the ribbon cutting. He shook hands with the staff. He cried a little, which he would have hated if he'd been fully aware of it. He passed away 14 months later. Owen showed up to the funeral in a suit I'd never seen before. He hugged me at the graveside and told me he was proud of what I'd built. He said what I'd built like it was a compliment. At the time, I took it as one. I should have paid more attention to his lawyer standing 20 feet away. My father's will was straightforward. The business assets transferred equally to Owen and me, 50% each. The management agreement I'd signed with my father would expire upon his death, which I had known. What I hadn't fully processed was what that meant in practice. It meant Owen now owned 50% of a business he'd had nothing to do with for 4 years. And Owen, it turned out, had spent those 4 years nursing a grievance that had quietly become a legal strategy. 6 weeks after the funeral, I received a letter from a law firm I didn't recognize. Owen was filing for dissolution of the business partnership and a buyout of his share, valued, according to his expert, at an amount that reflected the current business value without accounting for the debt I had personally serviced, the capital I had injected from my own savings during the lean years, or the management fees I'd never collected because I'd reinvested everything back into the company. His number was almost double what I could afford to pay. The letter was polite, professional. It used words like equitable resolution and fair market valuation. What it actually said was, pay me half of everything you built, or I'll force a sale and we'll split whatever's left. I sat at my kitchen table for a long time after reading it. Then I called my lawyer. Her name is June, and she has been doing business litigation in Ohio for 22 years. She is not warm exactly, but she is precise in a way that I find comforting. She listened while I explained everything. She asked clarifying questions. She did not express outrage on my behalf. When I was done, she said, he has a legitimate claim to 50% of current fair market value. That's just the law. I said I understood. She said, the question is, what that number actually is once we account for everything correctly That was the beginning. June spent the next 3 months building what she called a full picture of the business's history. We documented every dollar I had personally contributed, the $47,000 from my savings I'd put in during the first rough year, the $18,000 I'd loaned the business interest-free in year 2 when a supplier dispute held up inventory, the management fees I had never taken, which at standard rates amounted to roughly $112,000 over 4 years, the debt I had personally guaranteed and paid down, which Owen's original decisions had created. Owen's lawyer argued that contributions made under a management agreement were simply the job I'd been hired to do. June argued that I had never been compensated for doing it. We went back and forth for months. Mediation failed. Owen's opening position in mediation was that my contributions were sentimental and not legally quantifiable. I remember sitting across the table from him and thinking, you rehearsed that word. Someone coached you to say sentimental. I didn't say anything. I wrote it down. We ended up in court. I want to be honest about something. I was scared. Not of Owen. I'd stopped being scared of Owen sometime around the 3rd year of doing his job for him. I was scared of the process, scared of what it would cost, scared of what it would do to whatever remained of our family. My aunt called me the week before the hearing. She said she hoped I knew what I was doing. She said our mother, who had died when we were young, which was the shadow that had always hung over our family, would have wanted us to find a way through this together. I told her I agreed with that completely. She said, then why are you fighting him? I said, I'm not fighting him. I'm letting him have what he's asking for. She didn't understand what I meant. That was fine. June had found something. It happened the way important things often happen. Quietly, in paperwork, on a Tuesday afternoon. She called me and her voice had a particular quality I hadn't heard before. Not excited, more like someone who has just found a load-bearing crack in a wall. When my father set up the original business structure in 1994, he had included a clause in the partnership agreement, a document so old that Owen's lawyer apparently hadn't looked at it closely because it predated the current corporate registration by 2 restructurings. The clause stated that any partner seeking forced dissolution or buyout within 5 years of a documented material operational contribution by the other partner would be required to assume full liability for any outstanding obligations connected to that contribution. In plain English, if Owen forced me out, he had to take on the debt associated with everything I'd built. The supplier credit lines I'd established were collateralized against future revenue projections. The new location's lease had a personal guarantee attached that I had signed, but that, under the clause, would transfer to the pursuing partner in a forced dissolution scenario. There was also a deferred tax liability from the restructuring I'd done in year 3, legally clean but carrying an obligation that would come due within 18 months. Owen's lawyer had not read the 1994 agreement. Or if he hadn't understood what it meant in context. June explained our options. We could surface the clause now in pre-trial motions and likely force Owen to settle. Or we could let him continue to the hearing. I asked her what she recommended. She said, from a strictly legal efficiency standpoint, surfacing it now was smarter. I said, what if we don't? She was quiet for a moment. I said, he wants the business. He wants to force a sale. He wants his number. What happens if he gets it? June said, he gets 50% of the current valuation, and he assumes 50% of all outstanding obligations, including the ones attached to your management contributions under the 1994 clause. I said, and he doesn't know about those obligations. June said, his lawyer doesn't appear to. I said, let him have the hearing. June was quiet for longer this time. Then she said, you understand that means you lose, formally. I said, I understand. She said, I have to advise you clearly this is not the strategically optimal path. I said, I know, I just don't want to fight anymore. That wasn't entirely true. But it was true enough. The hearing was on a Thursday in March. The courtroom was smaller than I expected. Owen sat across from me in a gray suit. His lawyer was a man named Whitfield, and Whitfield had the particular confidence of someone who had done this 100 times and expected this time to be the same. I had told June not to raise the 1994 clause. She had documented our conversation, had me sign a statement confirming I understood the implications, and had done everything a careful attorney does when her client is about to do something she disagrees with. The judge heard both sides. Whitfield presented Owen's valuation. He was smooth and methodical. June presented our countervaluation, raised the question of my uncompensated contributions, argued for an adjusted buyout number. The judge considered it. Then she ruled in Owen's favor on the core question of valuation methodology. Owen's number stood. Owen looked at me from across the room. I think he expected me to look devastated, or angry. What he saw instead was something he couldn't quite read. I nodded at him. Once. Then I turned to June and said, we accept. Whitfield looked pleased. He was already stacking his papers. June slid the acceptance documents across. I signed them. Owen signed. The judge noted the agreement. It was over in 11 minutes. We were in the hallway outside the courtroom when I heard it start to unravel. Whitfield had pulled out his phone to call someone, his office, probably, or Owen. I wasn't listening, but I heard his voice change. I turned around. He was staring at his phone with an expression I recognized from the years I'd spent managing crisis calls with suppliers. The specific look of someone doing arithmetic in their head and arriving at a number they don't want to believe. Owen said, what? Whitfield said, give me a minute. He stepped away. I watched him make a call. I watched him listen. I watched his face do the thing June had told me it would do when someone properly explains a liability transfer clause to a lawyer who missed it the first time. Owen followed him. I could hear them talking in low voices, and then Owen's voice got louder, and then Whitfield turned and looked at me with an expression that was not quite accusation, but was definitely not friendly. He walked back. He said, are you aware of the 1994 partnership clause? I said, yes. He said, why didn't your counsel raise it? I said, we decided not to. He stared at me. I said, my brother wanted the business. I didn't want to fight about it anymore. He got what he asked for. Whitfield looked at Owen. Owen was looking at me with an expression I had never seen on his face before. Not anger. Something more complicated. Whitfield said quietly, do you understand what this means for him? I said, he'll need good accountants. The deferred tax liability comes due in 14 months. The lease guarantee is manageable if he maintains current revenue. The supplier credit lines are healthy. I built good relationships there. If he runs it the way it's been run, he'll be fine. I paused. If he doesn't, he'll know who to call. Owen called me 2 weeks later, not his lawyer. Owen himself. He called from his cell phone at 8:30 on a Sunday morning, which is when he used to call me back when we were kids, and something important had happened. He didn't apologize. Owen doesn't apologize, exactly. What he does is explain at length why the situation was more complicated than it looked from the outside. I let him talk. I'd been doing it my whole life. When he was done, I said, "I know." He said, "I didn't understand what I was asking for." I said, "I know that too." There was a long pause. He said, "Whitfield wants to know if you'd consider a consulting arrangement to help with the transition." I said I'd think about it. I did think about it for about 30 seconds. Then I called June and asked her to drop a consulting contract. Standard rate, 12 months, renewable. She said, "You're going to help him." I said, "I'm going to do what I've always done. The difference is now I'm getting paid for it." She laughed. It was the first time I'd heard her laugh in the entire year we'd worked together. I want to say something about what I learned, because I spent a lot of time being angry at Owen, at the situation, and my father for building something that could become a battleground. The anger was real. I'm not going to pretend it wasn't. But here's what I understood. Standing in that hallway watching Whitfield's face, people who fight for things they don't understand are still going to have to live with what they get. Owen wanted the business back because it had become something valuable, and he'd told himself a story about why he deserved that value. He'd worked there as a kid. He'd been named in the original charter. He was the son, and the business was called N Sons. These things were real to him. I understood that. What he hadn't accounted for was that value doesn't exist without the work. The business was worth what it was worth because of 4 years of specific, painstaking, often thankless labor. You can't take the value and leave behind the person who created it. It doesn't work that way. The obligations follow the asset, and the asset carries the history of how it got there. His lawyer should have read the 1994 agreement. Maybe Whitfield learned something too. I am still running the business. Technically, I am now a consultant, but Owen and I have reached an arrangement that resembles, more than either of us expected, the management structure my father originally put in place. Owen is involved. He attends the quarterly meetings. He has actually shown some genuine interest in the e-commerce side, which I did not anticipate. Last month, he texted me a screenshot of the October revenue numbers and wrote, "Dad would have liked this. He would have liked this. He would have. He really would have." I think sometimes about the moment I signed those acceptance documents in that courtroom. About June's expression, careful, neutral, trusting me while disagreeing with me. About Whitfield's confidence as he stacked his papers, already certain the story was over. The story wasn't over. It was just moving into the part where everybody finds out what they actually own. That's the thing about letting someone have what they asked for. You have to know what you're giving them. You have to have done the work. You have to understand fully and clearly exactly what is attached to the thing they think they're winning. When you do, when you've spent 4 years building something and you know every obligation, every liability, every clause in every document going back to 1994, walking away from the fight isn't weakness. It's just a different kind of clarity. The law is built on what you can prove and what you can document. I had documented everything. Every dollar. Every hour. Every decision. Owen got the business. He also got the invoice. And somehow, working through that invoice together, we found our way back to something I hadn't expected to find again. My brother actually showed up. I've thought a lot about the moment Owen called me that Sunday morning. 8:30. His cell, not his lawyer's office. That detail matters to me more than it probably should. There's something I've come to understand about people who fight for things they haven't earned. Not as a judgment, but as an observation. They're not usually cruel. Owen wasn't cruel. He was just someone who had told himself a story for so long that the story started to feel like a fact. He was the older one. He was the son. The business had his name on it, almost. These things were real to him, and I think at some point he genuinely believed that his claim was just. That's the part that used to make me angriest. Not that he was lying, that he believed it. But here's what I've learned. Slowly, and not without a lot of nights sitting with the discomfort of it. What we believe we deserve and what we've actually built are two completely different things. And the gap between those two realities doesn't disappear because we want it to. It doesn't disappear because we hire Whitfield, or because a judge rules in our favor, or because we walk out of a courtroom smiling. The gap is still there. It just has a due date now. I think about my dad a lot in connection with this. He built that business with his hands and his stubbornness and 30-something years of showing up. He didn't talk much about the philosophy of it. He just did it. But I think he understood, in the practical way that people who actually build things understand, that value is not transferable without the labor that created it. You can transfer the asset. You can't transfer the assets. Owen got the asset. He also got every obligation attached to it, and working through those obligations. The deferred taxes, the lease guarantee, the supplier relationships that needed tending. That's where something changed between us. Not dramatically. Not with an apology or a moment of reckoning. Just quietly. The way real things usually change. He started asking questions. Real questions, not legal ones. He started showing up to the quarterly meetings not because he had to, but because he wanted to understand. I didn't expect that. I think the version of myself from 4 years ago, the one who was exhausted and angry and running on stubbornness alone, wouldn't have believed that outcome was possible. She would have expected the fight to end and the distance to remain. Scars without healing. But what I've come to think is this. Integrity is not just about doing the right thing when someone's watching. It's about doing the documented, precise, painstaking work even when no one is keeping track. Because eventually the record speaks for itself. June didn't win that case for me. I won it 4 years earlier every time I filed correctly, every time I logged an expense, every time I chose to do the harder thing instead of the easier one. The 1994 agreement was just paper. What made it matter was everything that came after it. And Owen. I think Owen is learning that now, in real time, through the same kind of work I did. That's not nothing. That's actually everything.